I said, if there's inflation in 2 years or 3 years or 1 year from now, you raise the rate and you take care of the inflation, among other things. But he's probably a very political guy, I guess. I don't know. I think he's a very stupid person, actually.
President Trump began name-calling the Fed chair as reports say that he's looking to name Jay Powell's successor early. Live from Sydney, this is Insight with me, Paul Allen, where we dive deeper into the headlines with crucial context and sharp analysis. Well, the dollar falls against peers on reports that Trump may name his next Fed chair soon, signalling rate cuts too might come sooner than expected. The NATO summit gives President Trump a win on defence spending as he declares the latest Middle East conflict over and flags a meeting with Iran. And as Trump succeeds in getting NATO to increase defence spending, he's expected to arm-twist Asian allies such as Japan to do the same. We'll discuss this with Daryl Kimball, Executive Director of the Arms Control Association. Also ahead, a Bloomberg exclusive. CATL's Chief Manufacturing Officer discusses competition in China's overheated EV market and the company's global expansion plans. Markets are weighing a Wall Street Journal report that President Trump might speed up naming his pick to succeed Fed Chair Jerome Powell. The report says he could reveal the next central bank chief by September or even October, even though Powell's term runs for another 11 months. Sources say some of Trump's allies have pushed for Treasury Secretary Scott Bessent to get the job. Trump's also praised former Fed Governor Kevin Warsh as very highly thought of. The president's been pressuring Powell to lower rates by 2.5 points, and he took another jab at him while speaking at the NATO summit.
Yeah, I know within 3 or 4 people who I'm going to pick. I mean, he goes out pretty soon, fortunately, because I think he's terrible. We have no inflation. We have a tremendous economy.
For a closer look, then, at how the dollar and other assets are reacting, let's get to Avril Hong now in Singapore. Avril.
Yeah, Paul, I mean, even ahead of this Wall Street Journal reporting, we've been seeing this year investors turning tail on the greenback. It's really been bearing the brunt of concerns about U.S. policy making. And prior to the reporting, we already saw the Bloomberg Dollar Index down about 8% this year. It's now at the lowest since April 2022. It's these concerns about the Fed's credibility being undermined, but also it's spurring bets of a July rate cut. Why wait till September? And that's also prompting treasuries to catch a bid. Now, flip the board. The dollar weakness this year has also prompted some complications for some Asian central banks, including Hong Kong's. As you recall, we saw that rapid appreciation in the Hong Kong dollar from early April, and the HKMA basically pumped in a lot of liquidity into the system. But what this also meant was it drove down borrowing costs, so it raised the popularity of the Hong Kong dollar to fund carry trades, and then we saw that ensuing weakness in the Hong Kong dollar. So it hit the weak end of the trading band 785 against the greenback. Flip the board. The Hong Kong Monetary Authority has since stepped in and it has intervened to the tune of $1.2 billion. First time it's doing this since May 2023. It is raising the debate once again, as it does every now and then, about the relevance, the sustainability of the peg against the greenback. This is just speculation for now, but it's worth noting the subtle shift that Bloomberg M Live's Mark Cranfield has highlighted, that when you look at the Hong Kong dollar, it's actually been driven more recently by Chinese rates rather than dollar yield. So an interesting dynamic to watch. Paul.
All right, thanks very much, Avril. Let's get now to Bloomberg M Live strategist Mary Nicola for a closer look at how markets are digesting all the speculation around the next Fed chair. So, Mary, why is this report boosting bets for a Fed cut?
Yeah, we've already been looking at the fact that comments from Christopher Waller and comments from Michelle Baumann, they had already started looking at the idea of a July cut. And of course, and that was fueling speculation to begin with. And then, of course, this just adds to the pressure that the Fed is likely to see coming into the July meeting and then, of course, into the September meeting. And September was already fully priced, especially because we're seeing that that inflation has come down. But at the same time, now that there's more pressure on the central bank to cut, now the prospects of July look a little bit brighter for a lot of traders. And of course, that's putting pressure on the US dollar. And of course, in addition to the fact that we're looking at bets for July, or increasing bets for July, there's also the prospect of Fed credibility and Fed credibility being undermined. And that's also going to put pressure on the greenback.
Also, in terms of a successor to Jay Powell, I mean, President Trump's had some more unkind words from today, but Jay Powell was a President Trump nominee. I mean, if he picks a new Fed chair, is there any guarantee that that person won't act independently? Once they're in the room, they feel the weight of the data, the decisions, the importance of them. I mean, would anything potentially change?
Yeah, probably not. As you pointed out, Fed Chair Powell was an appointee by President Trump. And of course, now he's getting a lot of heat because of the fact that he wants the Fed to cut rates. And the Fed has been reluctant, and rightly so, because they don't know what the implication on tariffs are. We've heard that from Fed Chair Powell this week when he testified before Congress. They're concerned about the implications of tariffs. So far, we haven't seen it in the data yet. But of course, then you've got to think about employment. So I think one of the next critical things that's really going to tilt the market's bets is what we see from next week's employment report. If we see an uptick in the unemployment rate, I think that really does solidify bets for July, because at the end of the day, we need to look at what the Fed's dual mandate is. And it's not only inflation, but it's also the labor market. And if we see that inflation is in fact receding and that the labor market is starting to show cracks, then the Fed is going to feel even more pressure to start reduce rates even more.
I want to take a look at some of the market action a little bit closer to where you are, and Hong Kong dollar intervention is something we've been closely watching. And since that happened, we've seen a little bit of a moderate bounce off the weaker end of the band. But after that, is an increase in HIBOR next, or is that a less certain jump?
I think overall it's going to be a less certain jump, because what we have is the fact that they're going to have to intervene into the markets because they have to ensure that the Hong Kong dollar stays within the trading band. So of course it's almost like a trigger. If it goes to 775 or 778, 785, there's always the fact that the HKMA will have to come in to ensure that the currency stays within the currency board. And as my colleague Mark Cranfield had highlighted, that we had seen that the HIBOR was trending more towards China than to the US. But what does help also is that we are seeing a drop in US Treasury yields. So that could also ease some of the tension off a rise in the HIBOR rates.
Yeah, in terms of yields, we're also closely watching what's going on with the Japanese two-year auction. I mean, this is something perhaps markets wouldn't be as excited about since the Ministry of Finance signaled that there might be some more supply coming at the short end. What might we expect to see today?
I think in general, as you point out, that not many people were very excited about JGB rates for quite some time, and now the market is getting a lot more exciting. But I think the concern is, and there's going to still be lots of angst in the JGB market, because you still have lots of inflationary pressures, and of course the fact is that the BOJ is sitting on the sidelines. So as long as there is, let's say for tomorrow's Tokyo CPI, if that confirms that inflation remains sticky, and then of course next week you have the Tangen survey suggesting that growth remains weak, that sort of stagflationary picture is going to weigh not only on the short end, but it will also weigh on the long end, especially if we see that the BOJ is quite resilient and adheres to its bias to keeping rates on hold. So overall, I think you're just going to see a lot of anxiety in the JGB market.
Well, we've got another Bank of Japan meeting coming up at the end of July, so a little while off yet. But are the stars starting to align for more tightening?
I think in general they've been aligned for quite some time. It's more about when they will actually pull the trigger. So let's say, for example, if you see bets solidifying with traders looking for a hike in July and pushing the BOJ towards it, I think that would help and ease some of the pressure off the BOJ. But at the same time, I think it's been very, very clear that inflation is high and has been on the upside. But the concerns about a trade deal and what's going to happen with trade policy, that's been the key thing that has kept the BOJ on the sidelines. So maybe if we suddenly see a trade deal coming through, or let's say something after the July 9 deadline, which eases sort of the pressure that is going to come on the external balance side and on the economic outlook, maybe we see them finally pulling the trigger. But I think the underlying pressure overall on the BOJ to continue with hiking is absolutely there, especially with inflation not subsiding.
All right, Bloomberg Live market strategist Mary Nicola there. Thanks as always for your insights. And just getting a little bit of news related to China at the moment. Citi is lifting its 2025 GDP growth outlook for China, back with a 5 handle, up to 5%, raising it from 4.7%. Well, still to come this hour, we're going to get some insights on Iran's nuclear program. We're going to be joined by Arms Control Association Executive Director Daryl Kimball. And that's as President Trump casts doubts on the need for a diplomatic agreement with Tehran. This is Bloomberg. Leaders of most NATO member countries have agreed to boost their defence spending to 5% of GDP in a major win for President Trump. Bloomberg's Anne-Marie Hordern has more from their summit in The Hague.
In essence, it was Trump's summit, as his Secretary of State Marco Rubio said going into the NATO meeting at The Hague. There's a lot of flattery language given to the president, especially from Secretary General Mark Rutte, who really praised his insistence over the years for trying to convince the alliance to spend more. When they came out with a new defense to GDP target of 5%, devil is in the details, though. 3.5% of that has to be used to build up military, hardcore ammunition, artillery, and the likes. 1.5% of that, though, there's a little bit more leeway of where those funds can go to, maybe towards cybersecurity or border patrol or infrastructure that supports the country's defense industrial complex. But the cloud overhanging this NATO summit, of course, was the geopolitical uncertainty happening in the Middle East. And that is what the president dealt with at his press conference. A tremendous amount of time and questions were spent on what is going on in regards to Iran. I asked the president if his maximum pressure campaign on Iran will continue.
Yesterday, you said China can now continue to purchase oil from Iran.
Yeah.
Are you giving up on your maximum pressure campaign? Because there are sanctions right now.
With who?
On Iran.
No, look, they just had a war. The war was fought. They fought it bravely. I'm not giving up. They're in the oil business. I mean, I could stop it if I wanted. I could sell China the oil myself. I don't want to do that. They're going to need money to put that country back into shape. We want to see that happen. Would it? No. If they're going to sell oil, they're going to sell oil. We're not taking over the oil. We could have, you know. I used to say with Iraq, keep the oil. I could say it here, too. We could have kept the oil. No, China is going to want to buy oil. They can buy it from us. They can buy it from other people. But you're going to have to put that country back into shape. It desperately needs money.
Flanked by his defense secretary and secretary of state, the president maintains that report that said that the U.S. strikes on Iranian nuclear facilities only set back their program by months was preliminary and inconclusive. Anne-Marie Hordern, Bloomberg News, The Hague.
Iran's top defence official is in China this week for his first major diplomatic appearance since the end of the deadly 12-day war with Israel. Defence Minister Aziz Nazarzadeh arrived in Qingdao for the Shanghai Cooperation Organization summit. That's just days into a fragile ceasefire brokered by the US. While the truce is holding for now, each side has accused the other of early violations, underscoring the volatility that still lingers. Tehran's presence at the SCO signals a push to deepen ties with Beijing as it seeks more support from its allies. Well, let's get more insights on all of this from our next guest. Has 30 years experience in the international security field. Daryl Kimball is Executive Director of the Arms Control Association, a private organisation that addresses issues around nuclear, chemical, biological and conventional weapons. Daryl, thanks so much for joining us today. I just want to start with the whereabouts, if we can, of Iran's weapons-grade uranium stockpile. Apparently 409 kilograms of it. The IAEA says it's lost track of it. How serious is this?
Well, I think that is one of the many serious issues following the Israeli-U.S. strikes. The early assessments of damage are going to be preliminary. They're going to be low confidence. We're not going to know exactly what the state of the Iranian nuclear infrastructure is and the whereabouts of the material we know they had before the strikes until and unless the International Atomic Energy Agency inspectors get back into Iran and provide eyes on the ground. So, that material, which the IAEA has said, Director General Grossi has said, they don't know the whereabouts of, is enough, if further enriched, to bomb grade, to provide the raw materials for as many as 10 to 12 bombs. So if Iran has a residual enrichment capability, they can reconstitute the program if they want to pursue a secret effort to produce bomb-grade material. So I don't think the problem is solved as the president claims. He wants to show for political purposes that the strikes were successful. They did damage the sites, but there is more work to be done, and it's going to require diplomacy. It will require, I think, a deal to create a durable, long-term framework for the inspectors to stay in Iran and for Iran to limit or phase out its uranium enrichment activities altogether.
Yeah, in terms of damage to the sites, getting a number of differing reports here. President Trump reiterating that it is, what in his words, an obliteration. Iran's also conceding that those sites have been badly damaged. But how are we going to know for sure? Is that going to require some sort of independent investigation? And how motivated would Iran be to allow that?
Well, I mean, the best way is to have inspectors on the ground, and the only group that can do that is the International Atomic Energy Agency. Now, Iran, post-attack, is unfortunately now very allergic to the return of the inspectors. Just a couple of days ago, the Iranian parliament, known as the Majlis, passed a law barring cooperation between Iran and the International Atomic Energy Agency. That is a very bad sign, and that is going to be very difficult to overcome. It is perhaps a step towards Iran's eventual withdrawal from the 1968 Nuclear Non-Proliferation Treaty, which legally bars Iran from pursuing nuclear weapons. So we have some difficult territory ahead. The strikes clearly damaged the Iranian infrastructure, but it has also hardened Iran's resolve to continue with the program. It has made it much more difficult to track what's happening on the ground because the inspectors had to leave when Israel began striking Iran on the 13th of June. I mean, they were there safeguarding those sites. They had eyes on the ground. They had a good idea of where all of the nuclear material was. Now, not so much.
Critics of these strikes against Iran say that diplomacy was working, but in your view, was diplomacy working? Because it didn't prevent North Korea from gaining a nuclear weapon. Was it really going to prevent Iran?
Well, I think diplomacy with respect to Iran's nuclear program is the only and the best way to make sure that Iran remains non-nuclear. Look, the Obama administration with European powers, Russia and China, spent nearly 10 years of on and off negotiations that eventually produced the 2015 nuclear deal. It was working to contain Iran's nuclear capabilities. And then Donald Trump pulled out of the deal without a plan B in 2018. And since then, that is when Iran began reassembling and rebuilding its nuclear capabilities. And so his decision in 2018 is one of the proximal causes, along with Iran's bad choices, for the fix that we're in today. Donald Trump was, up until June 13th, the Israeli strikes, engaged in talks with the Iranians. There was supposed to be a sixth round of talks in Oman the following weekend. Those talks were interrupted. So, the Israeli strikes not only damaged the Iranian facilities, they sabotaged, they blew up the negotiations that were ongoing. We'll see if those talks can resume again in a week, as President Trump said. I think that is a good idea, but I think the atmosphere for those talks is going to be even more difficult than it was before. So we have difficult days ahead, and I think this is not the last. We're going to be talking about the Iranian program. This is going to be an issue for the next several weeks and months.
Yeah, given the context you just outlined there, as long as the regime remains in charge in Iran, is pursuit of nuclear weapons inevitable, because it is the ultimate security guarantee for a theocracy that nobody seems to particularly like?
Well, I mean, this is the risk, but we have to remember that, Iran has been pursuing this robust program that involves uranium enrichment for over 20 years, 25 years. But the Supreme Leader has not made the decision to move ahead, to put all the elements of the program together to try to build nuclear weapons. And I think we can find ways to create disincentives and incentives for that to remain Iran's choice. But that requires give and take at the negotiating table. It also requires trying to convince Iran, and I think they're learning this more and more, that the acquisition of nuclear weapons is not necessarily in their interest. I mean, this program, instead of being, let's say, a hedge to give them the option for nuclear weapons and security, it has become the object of aggression by Israel and an attack by the United States. So, this is a crucial period in which we need to convince Iran that openness and compromise is in their interest.
Yep.
But they also need to have the incentives. Donald Trump is going to have to think about ways in which to, as he seemed to indicate in that NATO press conference, ease sanctions and provide some guarantee of security that there will not be further U.S. or Israeli strikes in the future if Iran cooperates and powers down his program.
Okay. Thank you very much, Daryl Kimball of the Arms Control Association. Still to come, we're going to get insight on CATL's overseas expansion plans as the leading Chinese battery maker deals with intense competition in the domestic car market. This is Bloomberg. Welcome back. You're watching Insight. As China's EV market gets crowded, the world's top battery maker, CATL, is looking overseas to supercharge its growth. We caught up with the Chief Manufacturing Officer, Ni Jun, at the World Economic Forum in Tianjin to hear how they're powering their next phase of expansion.
Irrational competition, I will call. Everyone, the industry-wide and the government knew this is a problem, this is unhealthy, this will destroy the industry. So there's a lot of a sentiment to come up with regulations and policy to prohibit this kind of price war. And as a result, that also forced everybody to dig in. Can you further improve your internal efficiency and so maintain reasonable business margin to survive, to continue innovate. So as for that part, I expect they will.
How are you doing that? How are you improving your efficiencies?
We are trying to do everything, improve the production utilization.
How is AI employed?
AI has been used. Actually, CATL has been embracing the AI revolution maybe 7-8 years ago. At that time, it already started from simple, repetitive task and manual work. They try to use AI to capture, to do more efficient work. And now we're not only using AI to screen the material, because of different material, different chemistry, and also different design. And also during the stage of manufacturing, and also after the sales. So AI has been utilized to improve, make sure the process is stable, is under control.
Over the next 5 to 10 years, what would your ideal next generation super battery factory look like?
Well, I would say in the next 5 years, ideally, let's take on all the trade barrier, all the consideration. Ideally, it should be green, number one, because we want to save our planet. The factory, we actually already do extensive improvement. We reduce our energy consumption, reduce any of the emission, and recirculate any of the waste material will be recirculated into our production. That is the number one. Number two, it should be smart, so that any human labor-intensive, dangerous task should be taken care by machines, by robots, by computers. So that's what we are saying. Also should be reconfigurable, because when you put that production, this is a capital-intensive facility. Yeah. When you put that production line, you don't want to see, after a year, the product, the end product, our customers' vehicle don't sell well. They say, we would like to switch that to a different vehicle. Right. Can you quickly, flexibly adjust, adapt to the new product? So that's our effort. We try to make it as user-friendly as possible.
How do you avoid the pitfalls of overcapacity that has affected the solar industry right now? Mm-hmm. And a lot of people in the industry are fearing that maybe there's going to be a battery overcapacity in the coming years. How do you feel about that?
Well, we don't look at that. We believe when the global community going to green, sustainable world, and there's a surge, the demand is drastically increasing. The key is a high-quality battery. Of course, you can. If you don't put a high standard, you can put a cheap battery. That capacity maybe is plentiful, but the consumer and our basically world-class OEMs in car industry, in energy company, they demand a high-quality, safe, and a long-life battery. For that, there's a shortage. Otherwise, we will not go to many parts of the world to make those high-quality batteries.
Would you say going overseas now because of the high demand?
That's
well,
right.
There's obviously, I wouldn't say the market is saturated in China yet, but there's a price war, obviously, which is brutal. Mm-hmm. Would you say, though, that your number one priority is kind of figuring out the international expansion? That's right. The best, I guess, algorithm for making it work. Mm-hmm. Is that your number one priority?
Yes.
That is CATL Chief Manufacturing Officer Ni Jun speaking exclusively with our Chief North Asia correspondent Stephen Engel in Tianjin. Well, Xiaomi is unveiling its first electric SUV, the YU7. It's going to be a direct competitor to Tesla's Model Y. The Chinese company's shares have surged 64% this year as it becomes an investor darling with its high-stakes bet on the auto market. For more, let's bring in our Asia Equities reporter, Charlotte Yang. So, Charlotte, what are the key things to watch in this SUV launch?
Yeah, so this SUV launch essentially is going to be a make-or-break moment, I think, for its stock. And given that investors have really high expectations walking into the event, and specifically what they're watching is the pricing. So we already have some feedback saying that the consumers, they've had pretty strong reactions, positive reactions towards the specifications as well as the look of the model. But the pricing is what we don't know. we don't know yet. And the pricing is essentially the key determinant for consumer demand, given how competitive the Chinese EV market is. And estimates are now expecting the pricing to fall in the range of from 250,000 yuan to 330,000 yuan. And in comparison, that's around the range that Tesla's Model Y as well as electric version of BYD's Town L SUV falls into. And so if we actually get a pricing below the current market estimates, I think that would be a big positive catalyst for Xiaomi shares. Also, investors are watching how consumer orders will come in the first 24 hours as well as the 7 days for this model. So give you a reference that the first EV model, they got a little less than 90,000 orders coming in the first 24 hours. Those are cancelable orders, but still, that's a benchmark I think investors are looking at.
Yeah, how important is the success of this SUV model for its stock upside? Because, trading at 30 times earnings, the pressure's on to justify that.
Yes, so like I said, because the valuation has been so high, it's nearly 30 times, and almost doubling that of Tencent, also more expensive than Apple. So the pricing and the automotive momentum, Xiaomi really has to demonstrate to investors that it is worth it. And I think you have to understand that a lot of the investors, the reason why they buy into Xiaomi is not just because of the EV business. They like the idea that there is a tech company that can make both smartphones and also cars, and also AI glasses now, and also toothbrushes, and they're able to connect all of the products they offer. But EV is a key pillar to that ambition. But so I think that's why everyone's watching the launch later today.
Yeah, so is this just the first step? How crucial is this launch to Xiaomi's future plans in EV ambitions, considering especially just how overheated the market is in China?
Exactly. So I think for Xiaomi specifically, if we look at the EV side, the SUV model so far is, I think, one of the most popular segment for the China market. And so investors have expectations that they will be able to, with this SUV model, Xiaomi will be able to tap into a customer segment that wasn't available before. And also, Xiaomi has pretty ambitious target to turn its EV business profitable in the second half. And to do that, you will need production scale to help bring down the cost. And also, even for its own sales target that they're aiming to sell 350,000 cars this year, you will need the second EV model to deliver to reach that.
So any other catalysts that investors should be watching out for with Xiaomi?
Yeah, so the AI, even though the SUV is the most exciting product probably for tonight, but also Xiaomi is going to unveil its AI glasses. Market hasn't really paid that much attention to this product, even though Xiaomi has been touting its progress and efforts in this area for a while. And basically, this will mark how Xiaomi is now tapping into the wearable technology and how that fits into its broader strategy of connecting every product set it sells. And also, besides the AI glasses, I think investors also paying attention to Xiaomi's progress in terms of premiumization. So this company, in the early days, is known for value for money products, but now with more premium smartphones and also with EVs, they are trying to climb up to the pricing ladders. So investors are watching efforts in that regard, as well as how they're gaining market shares across different product categories.
All right, Asia Equities reporter Charlotte Yang there. Thanks so much for joining us. Staying on China, spatial design software maker Manycore Tech says its business model isn't affected by US restrictions on chip exports. Co-founder and chairman Victor Huang spoke with Bloomberg about how he's managing the global growth of the firm, but as part of a group referred to as China's Six Little Dragons, and that includes DeepSeek.
Right now, we focus on the country like Korea, Japan, America, Southeast Asia. That is what we more focus on. And our strategy is we do PLG, product leads growth. Then we can see in which country the retention rate is higher. Then we will put more efforts on the high retention rate country.
Do you have some visibility right now?
Yeah, of course. We do pretty good in Korea, Thailand, America, and also India.
Right. India's a huge market. When it comes to the U.S., given the geopolitical challenges, are you feeling any of that strain?
I think for PRG it's okay. For PRG it's more consumer-based product, so just currently everything going well. I didn't have any trouble from the government.
Because we're always very concerned about these export restrictions and perhaps more tightening coming from Washington. Is that at all a concern for you?
I think it's not a big concern because we are not going to compete with the large language model. It's a huge amount of high-end GPU. Our advantage is we accumulate a huge amount of just physically correct data that is so unique. So we can train our model slowly. So in that way, we don't need the biggest computing cluster.
When it comes to the future of your company, you mentioned different segments that are doing well domestically and also in the United States and globally. What is the overall ratio that you would think would be domestic versus other countries?
For long term, we hope 50% is from domestic and 50% from globally. But right now, the global income is about 10% of our revenue. We hope it will be growing faster. But actually, the online users, the PRG revenues is growing faster, much faster than domestic.
Oh, really?
Yeah.
Especially in America or in other?
Globally.
Like South Korea, you mentioned that
South
was
Korea,
good.
Yeah.
That's Manycore Tech co-founder and chairman Victor Huang speaking exclusively with our co-anchor Sherry An from the WEF in Tianjin. Now, despite restrictions on sales to China, Nvidia's shares hit a record powered by the global demand for AI. It's now the world's largest stock after adding nearly $1.5 trillion in market cap since April, taking its total value to about $3.8 trillion, and that's overtaking Microsoft. It's not only AI chips the world's going crazy over these days. Coming up next, the Labubu mania has gone global, but its popularity is in jeopardy as copycats and knockoffs start flooding the market. We're going to take a look at PopMart's biggest threats next. This is Bloomberg. Well, Labubu has become a global pop culture sensation, but other Chinese companies are looking to give PopMart's famous dolls a run for their money. For example, Mideast has come up with their own character named Wakuku, and many other Labubu copycats are also flooding the market. Bloomberg opinion columnist Shuli Ren is with us to discuss whether PopMart can hold on to its monstrous market lead. Shirley, I want to start with the most obvious question, which is why? Are we really doing this? Who's buying these things?
So Labubu came from China, but it really got viral, Paul, in Southeast Asia when Blackpink's Lisa was pronouncing to her fans that she was obsessed with Labubu. And then Labubu became really popular in China. And what we're seeing is that in recent months, the so-called Chinese Labubu moms, they were buying those toys to award their school kids if they were doing well in school. In Hong Kong, when you look at the investment bankers, like a lot of the female bankers, they were wearing Labubu keychains along with their Birkin bags. So what we are seeing is that the clientele of Labubu actually has gone upstream to the upper middle class. And that bodes really well for PopMart as a company.
Yeah, it's certainly paying off. The Labubu maker PopMart now worth more than twice as much as Sanrio and Mattel combined. So can it maintain Labubu's lead in this designer toys business?
So that's what everyone wants to know, right? Like now that Pop Mart has hit the jackpot, everyone wants to be in this business. Alibaba Pictures, they are also talking about doing designer toy IPs, and that stock is up more than 100%. There is a smallish Chinese company stock that's listed on NASDAQ called QuantaSing. Earlier this year, they bought a collectible toy IP design company, and that stock is up 400%. So everyone wants to be in it. And the question is whether Pop Mart can do enough to keep Labubu as the #1 designer toy. And I have to say that Pop Mart has to limit the supplies so that, influencers do still see that this toy is a scarcity in the marketplace.
Yeah, that does raise the question of market saturation, particularly with copycats, competitors, Lafufu, Wakuku starting to appear as well. Is this a fad? Could this see saturation and we stop talking about it as quickly as we started talking about it?
I think Pop Mart has to keep the Labubu supply very, very tight. Like right now, Labubu has a pretty vibrant second-hand marketplace. In fact, the scalpers can make more money selling Labubu than the company itself. And the company recently started pre-selling and flooding the market with fresh supplies. And I think they have to be very careful with that. Like what we have seen with all the designer brands, right? Like the Birkin bags, you don't get to not everyone gets to buy Birkin bags, even if you walk into a Hermes store. And I think Pop Mart has to make sure that the similar phenomenon happens with Labubu.
Yeah, we don't want a Labubu glut, do we? Bloomberg opinion columnist Shuli Ren there. And if you end up having to shell out more than you expected for the Labubu dolls, all those copycats, you can also blame President Trump for that, if you like. His tariffs are putting unprecedented levels of stress on Chinese manufacturers. Bloomberg visited one toy factory in Shenzhen to find out how it's dealing with the on-again, off-again trade war. Our China correspondent Min Lo reports.
The Barbie blow dryers and vanity kits, as well as these game sets, are just some of the toys made at this factory and shipped to the United States and around the world. Manufacturers are rushing to ship the goods as quickly as possible to avoid President Trump's tariffs on China.
The tariff impact on our industry is big, especially for companies like ours, where the majority of clients are based in the U.S.
Thousands of factories in China have been caught up in the trade war. America's largest toy maker, Mattel, has warned tariffs on China could lead to higher prices for consumers, with President Trump threatening the company directly.
They said, well, we're going to go counter. We're going to try going someplace else. That's okay. Let him go, and we'll put 100% tariff on his toys, and he won't sell one toy in the United States, and that's their biggest market.
Illinois-based toy company Learning Resources relies heavily on Chinese manufacturing. It has filed a lawsuit against President Trump, alleging he exceeded his presidential authority. Some toy factories like Bill's are looking to move new facilities to Southeast Asia to bypass the tariffs.
We are exploring overseas opportunities. For example, we are establishing a new manufacturing base in Vietnam, which is expected to begin operations in July.
Bill says for now, his employees in Shenzhen are working overtime, taking advantage of the current US-China truce. But if Beijing and Washington can't strike a longer-lasting deal, there will be plenty of tears to go around. Min Lo, Bloomberg News.
The DHL executive says global trade has shown surprising resilience despite uncertainties caused by President Trump's tariffs. Aditi Raskwahina is a Greater China CEO of the logistics giant's forwarding arm, and she spoke to us at the World Economic Forum event in Tianjin.
Global trade has been pretty resilient. If we look at China's export growth in the first 5 months, it's grown about 7%. So whilst having said that, with the tensions and tariff scenarios, organizations are deploying different strategies. Some are front-loading and looking at taking inventory forward so they have it when demand peaks. Others are looking at alternative sourcing and manufacturing networks where they can in the short run. And yet others have a wait-and-see approach, so let's wait it out and see what happens with the tariffs and the rest of the situation.
On that front-loading, do you see a tangible increase while we're in a 90-day pause, which is running out already, but our shipments definitely spiking because we don't have the certainty following mid-August?
That's right. So it was the spike in order to hit that 90-day window. So we're not sure what's going to happen after that period of time, but we do believe at some stage was to meet that window.
What are you seeing on the de minimis exemption that the Trump administration has essentially done away with, that $800 shipment exemption?
Right.
Have you seen a complete drop-off?
Yes, e-commerce has actually would have been the one that has had a little bit more of uncertainty of not knowing how to deal with the technology on the other side when it gets to the customs, right? So it's been on both sides for the customs regulation to figure out how they're going to handle it once the shipment arrives, but also for the organizations moving to know how to deal with the situation. So everyone's working on solutions right now to address the de minimis.
How much of a sales drop are we looking at between China and the United States?
Honestly, it really depends on the sector that it is. E-commerce has had the biggest hit, but if you look at the tech, like Apple's, Dell's, HP's, organizations like that, they're still flowing in the same form as they've gotten exceptions from the tariffs.
You mentioned about diversification. How are you seeing corporates, individuals, or mostly corporates, I would say, probably diversify from their shipping to or from the United States away from the more heavily tariffed China?
Depends again on the sector or industry that organizations are in. So those impacted by tariffs look for alternative sourcing locations, and you see a bit of shift into Southeast Asia. You see a bit moving to Middle East, Africa, Latin America. So it has been a varied amount of setups. There are those that still believe that China is the most cost-effective model that works for them. And usually the shifts of a production into Southeast Asia is to move to the US, and for the rest of the world and intra-Asia and within China, consumption generally stays in China.
That is DHL Greater China Executive Aditi Raskina with our Chief North Asia Correspondent Stephen Engle there. Before we leave you, let's take a look at how Asia FX is tracking. We've got the yen currently 144.75, so a little bit stronger against the US dollar. We are, of course, keeping an eye on the Hong Kong dollar as well. Right now, 784.95, reversing away from that weaker end of the band after we did see the Hong Kong Monetary Authority intervene in the market, purchasing about $1.2 billion worth of its own currency to support the Hong Kong dollar. So just backing away a little bit there. We haven't seen any tremendous moves in HIBOR off the back of this, a slight increase there. Dollar spot index, meanwhile, softening a little, 1196.52. Quick programming note just before we go. China's rise in the global tech race going to be in focus in our brand new show, Bloomberg Tech Asia. You can catch the premiere on Friday at 8:30 a.m. Hong Kong time, 10:30 a.m. here in Sydney, and that's 8:30 p.m. Thursday in New York. And that is it for Insights. Horizons Middle East and Africa up next. This is Bloomberg.